Welcome back to the Rebel's Edge, where Pete and I are going to break down a certain stock that Pete called the most expensive clothes hanger ever. Well, is that stock making a comeback? Maybe. We'll have the 411 for you on the Rebel's Edge. Bang.
All right, here it is. We're ready to rock and roll. This is the last one of the week, John. This is going to be, it's been a crazy week. Football's kicking off. I mean, we got the Fed in Jackson Hole. There's a lot going on financially and sports-wise.
Yeah, there is a lot going on. And by the way, that most expensive clothes hanger, since a couple of you have already emailed us or at least shot DMs to us on Twitter, it is not the ab roller. And it is not the Nordic track.
But it's close.
Those were right up there.
By the way, one other thing, John. Minnesota State Fair kicks off today. It's happening now. And the biggest state fair in the country, sorry, Texas, you always think you are, but you're not. For 10 days, we get almost as many people as the 30 days of Texas. So it is the biggest. Depending on how you want to view it. But people are so excited here, John. It's on every single news station. People are going to go there, and they'll be going there through the fair eating all these various things until they have a grabber. And I might be one of them. Oh, we'll have to see.
Medicare, Medicaid, all that. This is high alert.
Yeah.
All right. Let's get started, Pete, with Macro Minute. Mm-hmm. Macro Minute, my half, Pete, I'm going to say recent economic data releases have highlighted why indeed the labor market is slowing, shuddering, some might even say, especially with the 818,000 jobs that they just pulled off the rolls. And initial jobless claims, Pete, for this week, another nearly 250,000 people. So this is starting to sound like the Fed needs to move and needs to move pretty quickly.
And I think they will. I don't think there's any chance of an emergency move. Obviously, Jackson Hole, I think the Fed specifically, Jay Powell, who's been transparent, I think will continue to be, John. And I think he's going to basically pound that same drum that, hey, look, yes, we think that there is time to finally cut. It's probably going to be a quarter, is I'm just paraphrasing, moving in between the lines, but I think the 50 cent is probably not going to happen. I think the quarter point makes a little bit more sense for the DNA, the blueprint, however you want to say it, of how Chair Powell has been navigating. And I think we do have to give them a lot of credit, John, how they've navigated through a very difficult time going all the way back to the pandemic to where we are now and seeing these markets the way they've moved to the upside.
Well, I don't disagree. I'll also point out, Pete, that we started higher in all four major indices, S&P, Dow, NASDAQ, and Russell. And now we're all negative across the board, negative. And crude oil spiking by 2% right now. We've got gold moving to the downside by 1%. We'll get to more, but I'm going to say, Pete, that crude oil moving up in the face of Americans having a harder and harder time finding jobs. Instead going on the unemployment rolls, that might be something that really starts to move the inflation or even recession fears back into the market.
Yeah, and Goldman Sachs just kind of pulled back off of that. They jumped in there and then they kind of pulled back. And it's interesting, John, I'll tell you this. We talk about volatility all the time for all the important reasons of why it is so something that should be on your button when you're looking through all the things within the market. You're going to want to click and see where the volatility index is. Well, you take a look today, it's in the 17s, right? And we were just down all the way into the 14s. Why is that? Well, I think in anticipation of the Fed, certainly that's kind of building up in there. What we've seen today, and that's why we're seeing such a perk to the upside today as well. But let's not forget this. It's just 2 weeks ago, man. It was 2 weeks ago where we were sitting there at 65 in the pre-market. So the fact that it pulled back as fast as it did makes a lot of sense, I think, in some ways. But in some ways, you also have to figure, well, maybe there's a little bit of something left in there. Maybe there's some movements going on. And certainly everything that's in front of us over the next, call it 24, 34 hours or so, could be fairly big catalyst and actually get us moving, I think, in one direction or the other. But I wouldn't be surprised to see the volatility index test 20 again, maybe. On the other side of that, I also wouldn't be all that surprised if things go a little bit better than that we see the volatility index maybe pop a little bit and then pull right back down towards 15, 16 again, which is exactly where we just came from when we were in that 14 to 17 sort of a roll. So I think that the range is something interesting, but something that we should keep an eye on. And now it's all up to Powell where it goes from here.
Yeah, it will be, of course, him describing, Pete, why he's only going to give us a quarter point, which is another reason the markets might be softening. Because at some point, since the predominance of CME votes with their money, not just with some sort of straw poll, indicate that it's nearly a certainty that it's going to be 25 basis points. That's priced in, Pete. So we get 25 bips. We might get a move just for a few minutes or even an hour, but I would fade that because if it's priced in, we got room to the downside because we're at all-time highs for a number of these indices. All right, let's talk for a moment, Pete, about Peloton, because Peloton, you called it the most expensive coat hanger ever. I know your friend, the judge, argued with you on that. And he said, oh, no, people are going to pay, $3,000 forever for look at the big screen you get with it and everything else. And you said, you know what? People kind of like other people. They like getting in there and having some social interaction. And you were dead right. And if you look at where that stock has come from, folks, Peloton we're talking about, it exploded. And we did have unusual activity like crazy, in fact, in this one. These numbers don't even tell the whole story, folks. Those on the top of the page, 8/20 and 8/14, those two dates, we had unusual activity when it was $2.34. We had it when it was $3.20. Today, Pete, Peloton has popped up over $4 and is holding over $4 right now, $4.50, in fact. So, yeah, it's been a really nice ride. If you had those 3.5 calls, you really hit it hard. If you had the 4 calls in October, boom. Likewise, you hit it pretty hard.
Yeah. And Peloton being the most expensive clothes hanger, I still stand by that, by the way. And when you look at a lot of the different elements to what I was talking about, by the way, the stock was nearly 200. I think it was 187. So I think that somebody was right about the 187 mark being a top and somebody else was a little bit wrong. And this stock actually has been getting pummeled. But they did put up good numbers, John. I was very impressed with what they were able to do. I think you look at some of the numbers that were year over year and you look at the earnings, that was a huge improvement. So things are going well. By the way, they're still losing money. And there's a huge, if you didn't know this, short interest in this. So for today, it's having a heck of a day. Now, can it sustain this run? Can it continue this run? When you look at a lot of the different factors of the numbers that are there, John, this stock was underneath $3. It was $2.92. Yes, it's up a huge percentage to get up over $4. They got about 18 to 20% of the short interest. So those shorts probably not feeling that great today unless the hedge was them buying those calls, in which case they did the right thing, because that's something you and I talk about all the time. That's the squeeze. Well, if those shorts were smart enough to have bought some of those calls to hedge themselves to the upside in case of something pretty big like what they're seeing today, then that was a pretty crafty, pretty smart move. And I wouldn't be surprised if many of those shorts were a part of some of that buying of the two that you just highlighted, John.
Well, the September 350 calls, Pete, went over $1 today, of course, as they should, because the stock went over 450. So that would mean the right to buy it at 350 worth the difference between that, the strike price that you own, and where the stock's trading. So, and you've got till September still, Pete. So I think some of these people may indeed roll up. The October 4 calls went from 17 cents to 90 cents today. So you had two huge winners with very little risk when you were talking about getting into a trade like this. And by the way, it's not an option. If you bought the stock at 320 and it goes to $4.50, congratulations. That's a nice trade. How about if you paid 17 cents and it goes to $1? How's that? In other words, you might have put $170 down and you got 1,000 back. Mm-hmm. Vegas doesn't give you trades like that, Peter. Doesn't give you odds like that on very many things. You got to be pretty damn good to take Vegas for 5 or 6 times your money. This is an example of exactly that, and you can get it if you go to our website, itsnotanoption.com. That's itsnotanoption.com. That's the book that Pete and I wrote about trading options, and you could learn how to do them, folks. It's not that difficult. All right, second trade. Let's talk about Snowflake, Pete. Snowflake. Second quarter revenue, nearly $870 million, exceeding the consensus. That's good. Adjusted earnings per share, 18 cents versus 16. So a lot of what you're hearing out of Snowflake, Pete, sounded like it was pretty good news, didn't it?
It did, and yet, the sellers are out there. The palms are out. You can see it by the chart. I mean, down 12%, John. This is a stock, by the way, the range, 52-week range, 107 to 237, and today it was trading, last I looked, it was trading about 119. So it is awfully close to those 52-week lows. This is a stock, they beat on the revenues, they beat on the earnings. They basically fulfilled what we want, but they were talking about operating margins being a little bit weaker, and that was part of the guide. Again, we talk about it all the time. A lot of this ends up hinging on, well, what is the guidance? What do things look like they're going forward? You also had a lot of analysts out there who started lowering those prices, John, lowering what their targets are for the stock. So it's interesting. I love when you look at the balance sheet. Everything about that looks great. Fundamentally, this is a solid company. Problem is, they've got to figure out ways to do stuff a little bit better. And obviously with the margins themselves, with the guidance that they gave, that is something that people are kind of hanging their hat on. I actually would take the opposite side and say, basically the way it's gotten beaten up and the fact that it performed as well as it did, I actually would be able to look past that. I like this stock down here. I think it's gotten too cheap, but I think it's an opportunity.
I am in the same camp. That always surprises many of you when Pete and I agree on something, but we're looking at the same sorts of things. These numbers are great. Is the growth as fast as somebody way out there on the far end of that curve as far as the analysts? Is it out there far enough on the beat side that people say, well, God, a fantastic report, you got to own more of it here? No, but it is a strong earnings report. And you look at what they do and how many people want to be part of this. Jump Securities reduced their target. That was a negative, like Pete said. But other than that, I think they've just been basically wrong, JMP Securities, quite frankly. So the fact that they took their target down from 235 to 190, keep in mind, it was a lot less than that already. So they're just more or less getting in line with everybody. I agree with you, Pete. And by the way, for those of you who are snowflakes, this doesn't say make America great again. So those of you who are snowflakes, that says make volatility great again. Bang. All right. Let's dive in, Pete, to BJ's Wholesale Club. Yeah. Now, Americans are cutting back, right? And so they're going over to Walmart and so forth, and that's good for Walmart. Well, BJ's Wholesale, maybe they're going over there, right, Pete? Nope. Not apparently. Total revenue, $5.21 billion, beat the consensus. Adjusted EPS, 109 versus a forecast of 100. But club sales were not growing as fast as expected. Membership fees increased, and membership going up by 9%. Maybe that was part of it, Pete. But BJ's Wholesale Club, the report sounded like a good report. What do you think, Pete?
It did, and they had the digital sales. That was up 22%, and that's something that more and more of us are looking at when we're trying to analyze some of these various names that are out there. I think you're right. I think this comp sales number it's up 3%. That's just not what people were looking for. And I think across the board, they reaffirmed their guidance. That was pretty good. Membership fees are up about 9%. I think most of these numbers, if not almost all of them, John, looked pretty solid. But this is a stock that was probably trading very close, or was trading fairly close to to the 52-week highs. It's pulled back a little bit. This is another one where I'm looking at it going, okay, I understand that maybe there's a little bit of a reason for this stock to have gotten pushed down a little bit today. 7%, I'm not really sure that's right. And when I look at the PE of this stock, I start thinking to myself, this thing is maybe an opportunity. It's like we look at Costco and we look at all these various names out there that are discounters. I think this one makes a lot of sense down here at 81. I think it's gotten cheap enough that it's one where I'm not going to say that I would be interested in doing something today, but I think over the next couple of weeks, if this thing can stabilize and hold up where it, somewhere near where it is today, it might be a good opportunity, because I think that there's a lot more room to the upside based upon there's still a lot of trade down. We already know that because we've heard from the Walmarts of the world and the TJ Maxxes of the world, and now we've heard from Target, and they have their numbers. I think there's a lot of reasons why BJ's is being probably hit a little bit too hard given what they performed with this last quarter.
Well, BJ's, the model seems like one, Pete, that people will continue to embrace. But again, you've got Sam's Club, you've got Costco. Those are two big competitors to BJ's. And obviously, both of those, Sam's Club, part of Walmart, Costco, standalone, they derive an awful lot of that revenue from those people that are members of those clubs, not just the people that walk into the free version of Walmart. So BJ's needs to maybe address that price of that membership, Pete. Maybe it is a little too high. But the last thing you want to do is refund a bunch of money to people after you just came out with a quarter like this.
Yeah.
All right. One more, Pete. Urban Outfitters, URBN. So Urban Outfitters, we talk about this one because this is more or less a teen retailer. It's based in Philadelphia. They reported a 12.7% increase in earnings to $1.24 a share. That's certainly pretty strong, Pete. But Free People and Nully brands and Anthropology, I guess, were their main drivers. The flagship, Urban Outfitters, was down pretty hard in the sales. So they had three of their brands doing well, but the flagship, not so good.
Yeah, and that was the problem, obviously. I mean, you look at that one, and the flagship was not performing very well. As a matter of fact, the overall company sales are up 2%, John, but they had been up 4.9% a year ago. So they're showing a pretty decent slide to the downside. It's a big piece to this puzzle as well. I understand why they're punishing it today. I'm also looking at it a little bit closer, the fact that it's another one where you've got the PE, the price to earnings, is trading right around 11, John. Stock trading close to $37. It's interesting, but it's also one of those where when you look at the various brands that they've got, they're not the lower end brands. They're a little bit higher, and they're with the numbers that they came out with Urban. I think this is one of those where I'd keep an eye on it, but I'm not aggressively going to have to watch this one because it's just not interesting enough. I don't know how much upside there is, but I do know that the teenagers definitely, they might love you for a while, but they ain't going to love you forever. And I think that's part of the problem.
Yeah, it's a fickle group. And quite frankly, Free People and Anthropology are definitely more where most teens, especially female teens, would like to shop, in my belief, Pete. But Urban Outfitters, I'm not saying throw in the towel, this thing's done. They usually find a comeback, and we're going into their strong quarter upcoming. So I think on real weakness, today's weak, but it's not real weakness, like 12% like we saw over at BJ's. But I think you might get a chance to get into this one a little cheaper. All right, Pete. What do you got to wind us up for the week on sports?
All right. So we all know the NFL season's just about ready to start as well as college football. And so I wanted to just jump on this one, John. Is there one team out there, it might be your Chicago Bears, by the way, but is there one team out there that last year was not in the playoffs? They were eliminated, but they've done enough in the offseason. They've done enough in the draft and all of what's been going on. And let's be honest, free agency, specifically free agency, even happening now where there's some signings going on. And I'm going to throw out there Atlanta. And the reason I say the Atlanta Falcons, John, is this. So they're in a division with New Orleans and Carolina. And, you know, it's It's interesting for sure. Tampa Bay has been, pretty damn good. Their quarterback is playing well. Speaking of which, at Atlanta, they've got 2 new quarterbacks, right? Whether or not it's Kirk Cousins, he's healthy and he's able to stay healthy, that's going to be a challenge. We'll have to see because he's not exactly the youngest quarterback in the NFL. But then you got Michael Penix behind him, right? So you've answered that, question of what's wrong with this team. What was wrong last year was not the running back. Bijan Robinson was a stud. They got great receivers. They got Kyle Pitts at tight end. Great offensive line. Big linebackers that can run. They've just added even more. As a matter of fact, 5 of their 8 draft picks came to the defensive side, and they went out and grabbed themselves a defensive end up there from New England. So the combination of all that tells me that they're focused on the defense, which was not that bad last year anyway, and the offense was the problem. Well, maybe the offense actually can turn that corner. I think this is a team that last year was 7-10. I think these guys go double digits. I think they could win at least 10 and maybe more games this year based upon the fact that they finally have some quarterbacks who can throw the ball. He could throw the ball out there to Drake London and all these receivers that they've got in the tight end. I really think Atlanta could be one of those shocker teams where people all of a sudden midway through the season go, hey, who are these guys?
Could be. Sure could be. I was looking around, Pete, and I was looking at NFL odds and things. And by the way, do you know who the comeback players of the year are scheduled to be, perhaps, Pete? At least where the money is right now? Aaron Rodgers and Joe Burrow. Because remember, folks, Joe Burrow went out in week 11 last year. So it became very difficult for Cincinnati without their star quarterback, just as it was difficult for the Jets without theirs. That's going to be an interesting one to watch, Pete, and I wouldn't mind putting some money on that myself, quite frankly. I do like Cincy. I think Cleveland also, Pete, one of the best offensive line, defensive line setups. I mean, that beast on the defensive line for Cleveland is just incredible. One of the best defensive players there are, 95. And I think people have to overcompensate for him. And because of that, it opens up stuff, as it always does, for other players. So watch as to whether or not Deshaun Jackson keeps his head on straight and everything. And if he does, Cleveland might be one of those teams, Pete.
It could be. I like your call on the Jets, too, because the Jets' defense last year remained really, really good. The problem was they didn't have anybody at quarterback because once you lost Aaron Rodgers, you started going through the usual suspects, and none of them could step up. There was too many interceptions. The offense was not really doing what they needed to do on their side of the ball, but the defense was. So I like that one a lot. My only issue with Cleveland at all is I'm not so sure Deshaun is the same quarterback that he once was. And I'm going all the way back to Clemson. But in any case, maybe he is. I know right now a lot of people feel like he might be the most overpaid athlete in the NFL because he got a monster contract and he really hasn't had much to show for that contract. How about this, John? NFL receivers. Now, I will submit to you this. I think that the receivers in the NFL, that is the deepest position of all the positions in the NFL. It's not quarterback, it's not O-line, it's not D-line, it's not running backs, blah, blah, blah. I really do think it's the wide receivers. And it's interesting to me, John, that suddenly they're paying these guys so much money when the fact is everybody's got a number one receiver that's damn good. Everybody. 32 teams, you're going to find a receiver on every single one of those teams. You're not going to find a quarterback on every one of those teams. You're not going to find a running back on every one of those teams, and different other positions. So I think what I'm getting at is this. I think these general managers are freaking screwing up by paying the kinds of money that they're paying. And we all know that a lot of them are still holding out, right? San Francisco with Ayuk, you go down to Dallas and you've got CeeDee Lamb, you've got Chase, you've got all these guys who want that $30-35 million contract, which, by the way, that would be 10% of what you're paying for the entire team. Now, we already have a huge percentage going to the quarterback. And if we're suddenly going to give another 10% of all our money, the $255 million you can spend into this receiver. And John, I'll ask you this. Is the 10th receiver that much different from the first receiver? And is the 20th receiver that much different than the 10th receiver? I just look at this and say, hey, if I'm a GM, there's enough good guys. And by the way, in the draft this year, John, first 37 picks, you know what the deepest was? Wide receiver. 10 went in the first 37 picks of the draft this last year. So those are the guys who aren't going to be getting 20 and 30 million. I think these guys are paying too much, and you could just revolve this thing around every couple of years and just keep on drafting these wide receivers, paying them a heck of a lot less, and then you've got room for the rest of the team. What do you think?
Well, yeah. Clearly, Pete, if you're talking about like a guy like Chris Jones, defensive tackle for Kansas City, there aren't too many Chris Joneses out there. And he makes the most of any D end. He makes 31 plus million a year. Travis Kelce, 17 million at tight end. I would say to you, Pete, that he's certainly one of the best tight ends, but you can find a lot of tight ends that are really good. And the separation isn't like this. The separation is really tight between, I mean, your team, the Vikings, have one of the best tight ends. Mm-hmm. So I'm not saying he's the same player as Travis Kelce, but he's close. When you're talking about those wide receivers, I agree with you. It is a much narrower separation. Sometimes it's speed, like the cheetah down in Miami. Other times it's body. You've got a big body like the kid up in Seattle, Pete, that just nobody can stop that guy. But you've got defensive ends like Nick Bosa making 33, 34 million a year. You look at a Christian McCaffrey, Pete, are some of these wide receivers worth double what Christian McCaffrey makes? He's the number one running back. He makes 19 million a year. Some of these receivers are going to make double that. And like you said, apparently these GMs don't understand supply and demand, because if you have an oversupply at one position, like you've described, with an awful lot of really good wide receivers, then it's not working the way that modern theory would say that it should work. You should be flipping that upside down. McCaffrey should be as the standout running back, making that $38 million, and the receivers should be making 19. But that's not the way it works. We both know it.
Well, the one last thing I'd say on that note is this. McCaffrey might be the best receiver in the NFL. He just might be, even though he's a running back, right? I mean, the guy's a running back, he's a receiver, and he throws the ball once in a while. This guy, he is the best athlete in the NFL, bar none. People could say whatever they want, but this guy's playing and can play three positions. That's pretty amazing.
He is amazing. Well, thank you for joining us, folks. Remember, the book, It's Not an Option. If you go to that website, you will only pay shipping and handling. This book is free to you if you go to itsnotanoption.com. So head on over to itsnotanoption.com. Don't forget also, you can join us down in Miami on October 11th. Mastermind, Rebel Mastermind. We've got Grant Cardone. We've got Tom Lee. We've got Larry McDonald, a futures trader who is so big that his security detail won't let me tell you who he is, but you'll be able to listen to him and watch him trade as well. And you're not just watching us trade. You're asking us questions throughout the day. We limited it to 100 people so it could be much more intimate. In the big event that we've got the preceding 2 days, that's thousands of people over at Turnberry. We didn't want to do that for this live trading event. It's only 100 people. And you can get there by going to marketrebellion.com/mastermind, or you could scan that code and join us there. Boom. That said, have a great one. We're back Monday at 1 p.m.